Hello everybody, welcome back. Let's have a quick look at Bitcoin. So we're going to talk about this incoming death cross. You know, as far as I'm concerned, a death cross already took place. It was the one on the exponential. I prefer exponentials when it comes to Bitcoin for obvious reasons, because crypto in general is pretty volatile. Obviously, you know that. And when it comes to moving averages, they're pretty lagging. Even the exponential moving averages are lagging indicators. I often find that there's more relevance to the exponentials because they move faster. Obviously, they're exponentials, and than the simple moving averages. So, without going into all the details of the timings and the tiny little inclinations between the two of them, we can have a look at. Let's have a quick look. So this is this tiny little skinny purple one is the 50 simple moving average. This bright fat yellow one is the simple 200 moving average. This got a death cross here. This and then the green and the white got a death cross here. So this is shown in this daily time frame that the simple moving average got it first, and the simple moving average basically marked almost the absolute low. The exponential moving average marked essentially the low. There was only a retest of the double bottom that came in afterwards. None of them, neither the exponentials nor the simples on the daily, actually brought the price down any further than it had already gone. And if we go over to what we're seeing now, we've already got our exponential death cross here. We're about to form our simple moving average death cross probably over the next few days, and you could argue that the same thing is, you know, could have already taken place. Now, excuse me, if we go to a 4-hourly, when we're trending up, for instance, and we're in a savage uptrend like the ones that we've seen already, if we have a look at a death cross on a 4-hourly, they do seem to have a bit more of a reaction, and probably the reason is because they're lagging indicators. You go through to a smaller term time frame, it does sense a change of behaviour. Then yeah, it is likely that it will have some kind of impact on it. Now, it's still a lagger, as you can see us going up all the way over here. The first death crosses were formed here, exponential first, which is usually what you'd expect because they are faster moving averages, or even though they're both 200 to a 50, and this is your simple moving average death cross over here. And again, they are lagging, so the exponential got it first, and if that was the case, if you really wanted to try and play the cross, which I would never suggest anybody do, you would have managed to catch a 14% move down. And if we think about the simple moving average, that crossed literally at the bottom. If anyone tried to play that, you'd have got wrecked, basically, to the tune of 26%. So exponential beats simple. Over here we've got another death cross as well, so we had a recovery, golden cross, pretty anemic, and then the death crosses took place for almost both of them at the same time. On the 4-hourly, this is still technically downtrending, isn't it, for the 4-hourly now, because that signal, if you treated it like a signal, and these aren't signals, this is what I think people need to recognize. These aren't signals. People like to try and play death crosses like a signal, but that's really not what you're supposed to do. 47% down from that 4-hourly death cross, so pretty impressive stuff. And again, we had the same kind of thing over here. We're speaking about it as it took place. There's a lot of death crosses are happening, death crosses are taking place, death crosses over here. We've got the simple moving average first, then the exponential. Because it's a lagging indicator, and this is it wasn't weak, but it was a short-lived uptrend. The exponential got it, looks like maybe just only a few hours after the simple. But again, the simple crossed here, marked essentially the bottom. The exponential got it here. There was still an uptrend before the lows, but the 4-hourly is what I'm trying to say seems to give you much more of an indication. So what I was saying about signals is that people like to play the death cross. Death crosses happen, let's go crazy. Especially on the 4-hourly, you could think about it as maybe a signal in the making and wait for us to come up and retest those moving averages before you go into a short position. But on a daily, unless you're absolutely adamant that we're going to go into a bear market, and I mean absolutely adamant, I wouldn't really take it too seriously, because the last time we had one of these marked the bottom, and again, neither of the simple nor the exponential were particularly useful. They essentially marked a low, almost like a counter indicator. This is what you'd really want to see in a bull market. You'd want to see these being, I suppose, non-events. if we were in a bear market, then this would be a full-on change of behavior, and you would expect much longer, drawn-out, lower lows, lower highs, and these pushing us down as areas of resistance, making it harder for us to reclaim them until, of course, we go back in time. Let's have a look at the bear market when it finally finished. So this is our final death cross here, little golden cross, death cross again, and then we can see that the 50 and the 200 basically pushed us all the way down to what would be about what was the price here with this death cross measured out. So it was about another 50% move down from that death cross to the absolute floor, and then finally they move static. They make a golden cross, which is where the bull market begins. So, you know, people talk about death crosses, and I address them when they happen, I suppose, but I don't try to make such a big deal out of them because, you know, when we're talking about daily death crosses, that's you know, they rarely happen, and you know, in a bull market like what we've seen here, when they do happen, they're kind of non-events. I mean, they have happened. Look, death cross happened over here. This is after the parabolic run in 2019. The death cross took place here again, once again, more or less marking the lows. This is a black swan. We can't really count for that. But again, if you were to try and count it in, death cross took place here for the simple move, for the exponential moving averages. Again, the day after the low was printed, and the simple moving average marked this point here, where essentially the low was more than in, and a rally had already started. And again, if you tried to trade that as a signal, you would be more than wrecked. You would be absolutely wrecked. So, I mean, that, I suppose, is in a nutshell how I choose to interpret this death cross, the one that's already happened and the one that's already coming. And again, my analysis remains the same. $40,000 area, yeah, within a few $1,000s is probably going to be the bottom, and we will accumulate around here. And again, I've been saying this the entire time, saying it before the dump, after the dump, throughout this trend. This is what I expect, this is what I'm looking for, and this is what I think we're going to get. So, outside of those death crosses, just so you know, we're still in this descending channel. We've come up to the top of it. Okay, fair play. Are we going to get rejected from here? You would expect so. Like I say, this was the trade to make, wasn't it? And for those who had the time, or the skills and experience, or the facilities, or maybe even just the money, the trade, the derivatives trade, that would be, had been played here. Now, it doesn't mean that this can't continue on. I mean, it certainly could. There was some reasonably optimistic things said by the Fed yesterday, but yeah, still very cryptic information comes out of the Fed. There's usually a lot of speaking and not enough, or not any substance, to be honest with you. At the end of the day, the tapering will continue until inflation comes down. We're going to get some results today. That will be a pinnacle moment, whether or not we see inflation higher than even expected, or actually a little bit lower. That kind of information may have an impact. But to be honest with you, the tapering has all been priced in, and in my opinion, it's all been priced in. There's no difference to what we're seeing. It's all just priced in. And all we're going to see now is the whatever the economic reality is, have an impact. But again, the chart so far is not a bearish chart. It's not bullish. It's not bearish. It's in an accumulation phase, and it is vulnerable, I suppose, in many ways to the dollar. But it's not the worst thing in the world. There's still some epic trades to be made these days, and like I say, the main thing for me would be, I've already done it, but to top up on my Bitcoin balance and then play this range where possible, and wait for the ultimate recovery. Also, altcoins don't look too bad. We've already got an extremely good trade that took place the other day with VRA. One of the altcoins that I didn't mind talking about on the channel, picking this up at 6,000 sats. There are a lot of other altcoins that I don't really want to talk about because there is risk there. Don't want people to go onto an unnecessary risk because they think I'm doing it, and because I've done it, it's a definite win. If there's something that I feel like is worth talking about, I'll talk about it. And again, this VRA trade was definitely worth, sharing about, why I'm doing it and what my entry point is. And so far, so good. That's been a decent rally from the 6,000 stat zone to where we are right now. It's a 24, almost 25% move, so you can't really complain with that. Versus Bitcoin, and this is all we're looking to do. The VRA trade is looking pretty good. Looking for another entry soon on ICP. ICP coming down to an acceptable level after its massive rally huge rally, to be honest with you, versus Bitcoin. Almost 100% gain, so doubling in its Satoshi pairing over a period of 4 weeks or so. So there are still some really good trades to be made with altcoins. Some altcoins are actually just destroying Bitcoin on these rallies. And I expect this sort of thing to continue, but this is again, this is the sort of thing you've got to be careful with. If you don't know what you're doing, or if you're uncertain about what you're doing, or you don't really understand what I'm talking about, then don't do it, and just ride it out until we go into a more significant uptrend. But there are some gems, some real gems. Even XLM's working out like we expected as well. So it's all looking pretty good. I urge you to follow me on my Telegram and obviously subscribe to this channel, because the things I do present on the channel I've thought about quite carefully. I don't really want to bring stuff to the channel that could particularly hurt people. I think XLM is certainly looking for its breakout now, at least to this level, and we spoke about it coming up to 800 sats, which again, some people might find unbelievable. It's all documented on my channel anyway, but there are a lot of other altcoins that I've been entering, especially Kucoin. You can call them gems, but they look like absolute turds that add extreme risk to your portfolio balance, but I'm prepared to take those on. But the ones that are less risk, I've spoken about. Anyway, I'll leave it with you there, guys. Thank you for watching. Hope you have a nice day. Take it easy.